yo, what's good, guys? What is happening? Welcome to the Traders Reality Show. My name is Tino, and today we are going to talk about a pattern that I've been noticing across the channel, in the Discord, you name it. There are a lot of people that are trying to establish their trading style. Okay? Now, really, there are two ways of trading. You're either going to scalp or you're going to swing trade. Now, scalping is about placing a bit of size and anticipating smaller moves in price and paying yourself at the first moment you realize a return. It's the principle of scalping. You know, you're cutting in, right? Swing trading, on the other hand, is opening a position and anticipating a bigger move over a longer period of time. That period of time could be 2 days, 3, 4. It could be up to a week, 2 weeks, can even be a month. Okay? But people are trying to establish what thing is going to work for them. Okay? Is it going to be swing trading? Is it going to be scalping? In order to establish the style of trader that you are, you need to look at your personality. Swing traders, you have to be a bit more patient to swing. Okay? You've got to be able to have a little bit more liquidity on you so that you can withstand the drawdown, or when price goes against your entry. You know, how long are you prepared to be in a negative position before you decide that it's time to close it, or before you say, I'm going to anticipate this drop, I'm getting ready to actually add to my position in the hope that price is going to continue in my favor. You see, swing trading, or should I say trading the way the market maker trades, okay, is really a swing trading method. But the difference is this: we haven't got capital at our disposal. The market maker does. You see, the market maker can be as irrational as he wants. We can't. Okay? Whether you have $1,000 or you have 10, 20, even if you have $1 million, there is still that element of reservation. You'll always have to protect the balance. Because as long as you protect that balance, you'll be able to play in the game. No balance, no game. All right? You see, the market maker, he does things differently. He has not an infinite amount of money, but he has very deep pockets. Why? He's the liquidity provider, ladies and gentlemen. He's the reason why we are able to open a trade and close a trade, because he's providing the liquidity to allow us to do so. So what do I mean about trading like a market maker if you are a swing trader? But also, a scalper is also trading like the market maker. Why? Because a scalper, all right, his whole objective is to take as many profits as he can in a short amount of time. And the way he does that is by executing many trades. It's no different to the market maker. You see, the market maker is buying and selling continuously. He, by principle, is scalping. Okay? He would be scalping the spread. All right? So if you come to an exchange, for example, like MT4, all right, you will notice, I'll show you right now, okay? You will notice this gap between price. As you can see, you've got the ask line and the bid. The distance between is the market maker's spread. So this is where he makes his money. All right? And he's opening and closing positions in this zone. The tighter the spread, okay, the easier it is for you to realize a return if the trade goes in your direction. You see, if the spread is wide, okay, as you can see, it's starting to get a bit wide right here, right? If it's wide, it's going to be harder for you to realize a return sooner. Now, if you're a swing trader, it's different. But as a scalper, if the spread is wide, it's a bit of a problem on your entry because you have to wait until price goes beyond the spread, okay, before you realize a return. Okay? So, how do you determine whether scalping or swing trading is for you? As I said to you, it's all about your personality. Scalpers have to be impulsive. They have to be like, you know, it's quick draw. Fast in, fast out. There's no questions. Has the trade gone in the direction that you favored? Yes or no? If it has, take a profit. If it hasn't, close it. There's no time to play the game of, well, maybe it will come back up later on. No. You're not sticking to the process. See, a scalper hasn't got time to sit and say, right, I'm going to wait and see if it hits this zone. If it hits this zone, I'm going to get out. And then it comes to that zone, he doesn't get out because he then goes on to the higher time frames and he says to himself, yeah, it looks like price is actually going to continue higher. No, that's not how it works. Here's an example. Drop onto the 1 minute time frame, right? And you can see bright as day, right? That you've got all these movements in price. Now we understand something. We know that on the 1 minute time frame, price always tends to pull back to the 50 EMA. For every time it deviates away from it, we expect it to come back to it. Right? It's the regulation of the behavior of price. All right? Go back in the chart. Challenge me for this. Go back in the chart and tell me if price doesn't come back to the 50 EMA within a certain period of time. Usually on the smaller time frames, it comes back to it sooner. All right? Now, as a scalper, your goal is to capitalize on these little pumps. The moment price pulls away from a moving average, that's when you need to start paying attention. One simple strategy for scalping could be, the moment price pulls away from the moving average, you are preparing for a pattern. So you're expecting a retrace back down to it. If it shows support and pulls away, happy days. That's what you're waiting for. So by principle, your entry, or two entries, could be there. Or you could have yourself an entry down here. Excuse me. Or if you are really brave and you believe you've got the read on the market, your entry would be the moment prices closes above the 5, 13, and 50 EMA. Okay? So in other words, when the EMAs are stacked in our favor. Now this is even before the pattern prints. But there are guys out there that will try and exploit this principle because they assume that price deviating, moving away from the 50 EMA, the first retrace back towards it, if it doesn't break down below it and show support at the 13 or the 5, there's a good chance that it's going to continue higher. Look at what it did here. Rise, retrace, continuation up. Rise, retrace, continuation up. Market maker steps in. They have spent too much time away from the 50 EMA. They now need to come down to test it. And they did just that. You see, a scalper, he's only interested in quick gains like entry here, he's closing here. Scalper hasn't got time to be leaving money on the table, which is why I say to you, always close your trade when the momentum is moving in your favor. Don't wait for it to stop. Close at the highest possible point that you can. Or in other words, close at the point where you believe the momentum is starting to slow down on the candle that has created the move to the upside. You see, if you were waiting for this candle to finish, when it started as a 1 minute candle, it moved up higher and higher and it started to try and break this zone. The moment you started sensing that it wasn't actually going to continue higher was the moment you should have closed it. That is when you should have closed the trade, not when it's down there, because then you've left money on the table. So let's make the assumption that you entered on this candlestick right here, okay, as it was developing into a green candle. And then you rode all of that move up here and you didn't pay yourself. But then you decided to wait to see if it would continue. And then you sat through this little bit of a drawdown, spiked up one more time. You made the conviction that that was the candle that was going to continue. Then it didn't. And then it came down sharply down here. And then it came here and you decided to close at this point. Well, you would then establish your accuracy as a trader. Accuracy in terms of exit is based on how much money you decide to leave on the table before you actually take it. Okay? Your goal is to close into momentum. All right? Close into momentum and then reevaluate. Because if this move to the upside is valid, then the retrace will show you if they mean business to continue higher. So then guess what? What have you got here? You've got yourself another rise, another retrace, continuation to the upside. You would be waiting for price to break above this previous zone again as a safety entry, or you will try and grab the momentum from the 5 and the 13 EMA. See, a scalper has many opportunities to place trades. A swing trader doesn't. You see, a swing trader, if we take XRP in this instance, right? A swing trader would be waiting for XRP to come out of this zone. A swing trader wouldn't enter on this zone until he had the conviction that price was going to come out of the zone. So maybe the swing trader would have taken a trade on this candlestick right here, or maybe even this candlestick right here. Okay? Now he would have had to wait 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, nearly up to, nearly 11, 12 days as such before he was going to make an entry. Now, in 12 days, just look at what we achieved on this right here. Look at how many trades we could have taken just simply off this move to the upside right here. And that was a case of being from 5:30 all the way up to the point right here, which would be 6 o'clock, or 6:10. All right? 40 minutes. I've been able to either take, let's make the assumption that I took a trade here, I took a trade here, and I took a trade here. 3 trades in less than half an hour. Well, just over half an hour. Right? Whereas a swing trader, he's got to wait until he's got conviction of price coming out of a zone. And there's no guarantee that it would continue out of that zone. Because a swing trader will say, okay, I'm waiting for this bigger pattern to play out, and then I'm going to make my order, and price should then move in my favor. Well, it may move in your favor for a short period of time. You may be in profit, but then if it starts to pull back down into your entry and then lower, principally, you would have waited all this time for a trade to play out. You made the entry, and then it turned out to be a dud. This is why I focus predominantly on scalping, ladies and gentlemen. I've got the luxury of being able to open and close a trade on my basis. It's on my time, okay? I haven't got to wait for a bigger pattern, you know? I don't have to wait for a weekly cycle, a monthly cycle, don't need to. All I'm looking for on the 1 minute time frame is momentum. That's all I'm looking for. I'm looking for the points when price comes away from the 50 EMA to try and gain ground. Yes, you can see on the higher time frames that price is trying to move higher. That's shown on the smaller time frames when they pull away from the moving averages. And then when they retrace back down to the moving average, they will move higher away from that point. Look what happened here. They moved away from the moving average, came back down, tested it, stabilized. They came lower, came back in again, tested the 200 EMA. Then they shifted away from the zone. What do you see? Same pattern again. Rise, retrace, continuation to the upside. Right? It's a little bit volatile in this zone right here, but naturally, the pattern, there's always going to be a variation on it. Because by principle, your move here from rise, retrace, continuation would have spiked up here. You probably would have closed your scalp. If you would have held your scalp and waited for it to come down here before you closed it, nah, man, that's no good. That is a bad trade. Even if you made money on that trade, it would have been a bad call because you left so much money at the high right there. All right? So when you're coming to make the understanding as to whether or not you are a scalper or a swing trader, your personality has to be the one thing that will allow you to even think of becoming one or the other. If you are impulsive, scalping's for you. If you are more patient, swing trading is for you. Someone will probably say, well, why can't you do both? Of course you can do both. But the problem is, when you come to the acceptance that you can do both, are you going to stick to one when it comes to the actual trade? In other words, what if you're in a long right now? Okay, say you went long here and you believed that it was going to continue higher. So you then decide to turn that scalp into a swing trade because you are swing trading and scalping because you have that ability to do so. You need to make a distinction. If you're going to use both of the ways of trading, swing trading or scalping, you stick to scalping exclusively one day and then you swing trade on a completely different account, different coin, or even the same coin, but not in relation to your scalping account. You can't do it, guys, because you will never close the trade. If you're using scalping positions, okay, so your scalper will put more size down. A swing trade is going to be a bit more conservative, but he's going to have a lot more flexibility to sit through drawdowns, all right? A scalper hasn't got time for that. If you come into the chart with the mindset of a scalper, and then if price doesn't go in your favor because you want a bit of action, you decide to be a swing trader and hold the trade, then you are a swing trader. You've just got the attitude of a scalper, but you don't even scalp. You must make a clear distinction because as a scalper, you will have the commitment and the discipline to close a losing trade at an instance and be prepared to set up for the next one. A swing trader, you're going to have to say to yourself, okay, the thing is, with a swing trader, you have more time to reflect on your decision-making process, okay? A scalper doesn't. But the reason why a scalper doesn't is because he knows he has an abundance of being able to put himself back into that position of having to make a decision about a trade entry. That's the beauty of scalping. I can open a trade and close it. Guess what? All I can do next is get ready for the next trade. I'm not even in a trade long enough for me to work out what to do next. I'm out the trade straight away. I've taken my scalp, 3-4 points, done. What's next? Okay, let's start looking for another entry. Bang, I've made the entry. Trade has gone live. I've made my money. Come out. Oh, another entry. Yep, let me take that entry. Oh, this time it's losing. Bang, I'm cutting the loss. Next entry. Each coin is going to be different, or whatever asset it is you're trading. Okay? Bitcoin tends to be a little bit more volatile. XRP is a little bit slower, but when XRP moves, it really moves. Ethereum, in my opinion, hands down, is the best cryptocurrency pair to scalp, to trade, because it respects levels. I call Ethereum the dollar yen of crypto. I say dollar yen because dollar yen is what I've traded non-stop for 6 years. I traded that back to back, and I didn't do anything else other than just trade dollar yen, because I'm of the concept of, why be a jack of all trades, master of none? I wanted to focus everything on dollar yen, okay, and understand all her levels and how she behaves at certain points in the chart, certain news announcements. I just needed to learn everything about it. So I studied it. If you're going to become a scalper, ladies and gentlemen, pick the coin that you want to use, pick the currency pair, whatever it is, and focus on it, study it. All right? A swing trader, he too can also pick one coin, currency pair, and study it. All right? Try and master that. Because then with the hybrid system, you're going to know how to and what to use when it comes to trading that pair. Yeah? Now, as much as this video is short and sweet, ladies and gentlemen, I just wanted to put it out there. For anybody that is trying to work out whether they should be a scalper or a swing trader, it's all down to your personality. If you are prepared to, if you are impulsive, and when I say impulsive, people think that the word impulsiveness is not good. Well, no, it means that you're just making decisions quickly. You haven't got time to sit around. That's what a scalper needs to be. A swing trader is a little bit more conservative. He's got more time to make a decision. Okay? But just because he's got more time to make a decision doesn't mean that you allow your trade to sit in the red for that long. All right? Now, a bit of a breakdown with what's going on over the weekend, ladies and gentlemen. I'll just do this for you, and then I'll let you guys be. So, what's going on? It seems to me that across the board, ladies and gentlemen, where is it? Where is Bitcoin? That's not what I want. I don't understand why Bitcoin's not there. Let me just get that up for you. Here we go. On the 1 minute time frame, no, let's go on the hourly. Let's work out the hourly. Bitcoin has done very well. Done very well. Came down today and spiked these lows. And the Saturday stream with the YouTube members and the patrons, we were talking about this zone and we were trying to establish, would Bitcoin actually come back down? Or will they hold the zone and move higher? Now, if Bitcoin does decide to move higher, all right, it would have to show a lot of aggression because we haven't pulled back to anything yet. Now, do you guys remember when Ethereum was riding the 5 and 13 EMA non-stop and she did not even touch the 50 EMA for a long time? She didn't even touch it up until she went to about 3,200 and then she then bounced away from that and then made her all-time high. Are we going to see the same with Bitcoin? Seeing a plethora of videos, people talking about Bitcoin going down to the 30s. Okay, they're calling this it's a fake move to the upside. Well, let's look at the logic. All of this has been an accumulation period. If they wanted to go lower, they would have gone lower. Or they went higher instead. So let's focus on things happening to the upside. Why do I need to care about what's going to happen to the downside? It's irrelevant to me because I'm not seeing price doing anything to give me the reason to believe that it's going to go lower. Break the 50 EMA and close below it, retrace back up to it and fail to go through it, I'll start looking at going to the downside. Till then, it's above everything, so why do I need to care about what 35 is or 37, 30, 10 or even 50 cents? Who cares? Right now, Bitcoin is priced at 48,000 and I make my decision on what I see. And that's all you have, guys. The hard right is what we're all looking for. So, we're always trying to do a projection based on the behavior of price. But ultimately, why do you care about Bitcoin all the way down here? It's irrelevant. Yes, we've got projection zones right here. We've got vector candles right here. As we get close towards those zones, we will see those zones accordingly. Okay? If we're going to come down to the 40 mark, then there's a good chance I'm going to be paying attention to the 38 zone and then the 34, 35 zone with the vector candles. That's how you do it. Don't get caught up in your mind, because you'll be looking at this chart saying, right, yeah, it's going to go down. It's going to go down. Okay? But what if it doesn't go down? And I've seen many comments by people saying, look, man, I was waiting for it to drop down to 37 and it didn't. And then I watched it go all the way up to 48. And you were watching it from when it was at 40. What was wrong in you even taking a cheap trade and just going long so that you didn't miss out if it does decide to go up? And if it does decide to go down, you would have been prepared for it anyway, and you would have opened your trade and gone short anyway, or gone long and accumulated more Bitcoin at that lower point. Do you know what I mean? I hope this video puts things into perspective for you, ladies and gentlemen. I hope you can come up with the decision as to whether you are a swing trader or a scalper, because ultimately it's down to your personality as a trader. All right? You can go and get any system you want out there, all right? And it can give you a real good edge and you can kill it. But if you haven't got the mindset and you don't behave the way, or should be behaving the way, each system strategy requires you to, e.g. a scalper, you need to be impulsive, swing trader, a bit more conservative. All right? If you're not making the clear distinction, you are going to struggle in finding your identity as a trader. Don't pay too much money in losses to work out what kind of trader you are. Stick with an approach. Give yourself a sample size of trades before you say, right, I'm going to stick to scalping or I'm going to stick to swing trading. Okay? A scalper would need to do at least 300-400 trades before he can determine if he's a scalper or not. A swing trader should only really do about 20 trades. It's to determine whether or not he is a swing trader. All right, give yourself a sample size like that. And even 20 trades is not enough. That's just a sweet spot. Okay? So I hope you've enjoyed this video, guys. I just wanted to do this video for you because I've just been paying attention to what people are saying in the chat during the live streams. If you are new, be sure to like and subscribe for more videos like this. We're going to be doing more videos on top of the live streams as well. Remember, we stream twice a day during the week. That's Tuesday, Wednesday, and Thursday, 2 p.m. and 10 p.m. GMT. All right? So, other than that, guys, mad love and respect to all of you. Take care of yourselves. Peace.